Hi, Greg Lewis, MetaStock Software. You're about to watch one of the presentations from the 2017 Online Traders Summit. I know you're going to enjoy it. Before we begin, I want to tell you just a little bit about us here at MetaStock. We've been in business for about 30 years. MetaStock is about the most powerful platform you can get for the private trader anywhere. You can test, you can scan, you can forecast, you can customize to your heart's content. It's an amazing piece of trading technology. If you'd like to get a free extended trial of MetaStock, I encourage you to go to metastock.com/traders-summit 3-for-1. That's metastock.com/traders-summit 3-for-1, or just click one of the links provided, and you can get 3 months of MetaStock for the price of one. That's an amazing deal. I encourage you to do so. I know you won't regret it. Please enjoy the presentation and successful trading.
Let's move on. Barry Burns is our next speaker. Barry is, I think you're going to like what Barry has to say. I love Barry's methodologies. Again, I get a little bit over, I feel like I get a little bit over complimentary. Things I like about Barry is kind of the very, again, systematic approach that he uses, and kind of like his judgment methodologies that he uses when he evaluates a specific trade setup and that kind of stuff. He has joined us. I'm going to turn his microphone on. Hello, Barry.
Hello there, Mr. Jeff Gibby. How are you, sir?
Barry, is it just me, or do you sound more handsome every year?
No, everybody tells me that. Yeah. Yeah. It's in double-blind studies have proven that. The thing that worries me about that is that why are they testing people who are doubly blind to tell me I'm handsome?
Yeah, I would agree with that, I guess. All right, I just sent the screen controls over to you. I'll let you know when I can see your chart. Is there anything you want to tell us about yourself while you're getting running here?
Other than the fact that I get more handsome every year?
I think that covers it.
Gosh, I don't know. That's a pretty, I've never had such an introduction before. I like that one.
All right, I see your screen. I hear you, and I'm going to let you go. I'm going to give you the time.
Okay, my friend. Great. Thank you so much. Great to be here. And just to make sure that I'm sticking to the schedule here, do you want me to go for 45 minutes and then let you do a review like you just did there, or do you want me to go for the full 60 minutes? What's my time allotment here?
I'd like about 5 to 10 minutes to kind of talk about your add-on.
Yeah.
So up till about 5-2 or 10-2 is perfect.
5-2 or 10-2. Okay, excellent. Muy bien. Ausgezeichnet. All right, very good. Okay, so wonderful. So yes, you can see my screen. Welcome everybody. I'm very happy to be here. Been very much looking forward to this. Always look forward to working with MetaStock. And by the way, I got to also say Stocks and Commodities Magazine. I'm a subscriber, paid subscriber, have been for many, many years. Love the magazine and read it every month when it comes in. So highly recommend that y'all get a subscription to that as well, and say that from personal experience. So, and want to thank them for sponsoring this this great event with all these great speakers and great presenters and great traders. So today what I'm going to share with you is about timing your entries, timing your exits. But how to do this as part of a complete trading methodology with MetaStock. Now you can do this with other things too, but it really works just fantastic, and MetaStock has some unique advantages over the other charting platforms for sure, and we'll hit some of those high points as well. So what's interesting is that with timing your entries and exits, I find that this is one of the biggest problems that a lot of traders have, is they look a lot at support levels, resistance, price patterns, and all that stuff is great. Obviously, you've got to do that. But then they run into trouble as to, okay, well, exactly when do I get in and when do I get out? And that is part of the problem. So we're going to talk about all of that today and let's get this party started. So a little bit about me. I don't know if I actually do get more handsome every year, but that's my picture. It's a pretty recent picture. Well, actually, it's a few years old, but not too old. And Jeff asked me to introduce myself, so I am the author of Trend Trading for Dummies, published by Wiley & Sons. Have received Reader's Choice Awards from our good friends over at Stocks and Commodities Magazine. Actually, not from them. The Reader's Choice Award is kind of a People's Choice Award where they invite their subscribers to vote for their favorite tools. And so very feel just really proud that I have received many awards from the subscribers over the years. And I've contributed to some other authors' books. I've spoken to the Chicago Mercantile Exchange, obviously MetaStock, and worked with them on a plugin for Top Dog Trading, spoken to the Eurex Exchange, and many other things. Anyway, if you want to read my full bio, feel free to go to topdogtrading.com and click on the About Me tab, and you get all the details there. I don't want to spend too much of our time talking about myself. We definitely do want to be very serious about talking about the risks of trading, however, because especially if you're new to trading, you need to come into this with your eyes wide open. Understand that this is probably going to be more challenging than you think in your imagination. Trading is not easy. Most people do lose money. Gosh, aren't I a great salesman? Now I've got everybody really motivated. Oh, that's great. So, but that's true. That's the transparent truth, and it's better that somebody be very honest with you about that, and all of us here are. So it's not suitable for all people, and you can read the disclaimers there, and we're not making any recommendations. This information is for educational purposes only. Everything here is at your own risk. Make sure that you test everything first, and we don't assume any responsibility for errors or omissions here. So do your due diligence, and we encourage you to start with paper trading or simulation trading. Do not start trading with real money right away. This is a profession. You know, it's a real profession. It's not get rich quick by any stretch of the imagination. So yeah, you're up against professional traders, and you're going to have to be a professional trader to compete with us. All right, so now, first of all, let me ask a question. I'd like to get a little engagement going on. Wow, we got a lot of people here today. That's fantastic on a weekend. So congratulations to you, by the way, taking time out of your precious weekend is to be here. That tells me that you're very serious. If you would, type into the question box, what are some of your most common trading problems, struggles, or frustrations? So let's get this to be a little bit of a two-way engagement here, and let's see if we can help you. Since I'm here with you live, that's one of the advantages of doing these live presentations. If you share with me some of your problems, then maybe I can customize the presentation and address some of those problems, and let's solve some of those problems if we can. I like to be a problem solver. So we've got, oh, Zeb's actually at work. Really, you're at work? Wow. All right, Vishal, entry and exit levels. Okay, there you go. John, consistent profits. Another John, buying at the top of a trend. That's, yeah, not a good idea. John Carter, when to take profits. Manpreet, when to take profits. Oh, John was reversals. Sorry, it's scrolling so fast here. I'm losing track of where I'm at. Greg, setting long leg on short verticals. Selecting the stocks. Ella, option buying, how to avoid entering the losing trades. Jim, entry, exit, and stops. So that's the stuff we're going to talk about today. Absolutely great. Matt, trade sizing and entry and exit levels. Excellent. That's, again, what we're going to talk about today. Jason, getting into a trade that appears to be going in a certain direction, and then it reverses as soon as I get in. Yeah, it's funny how that happens, isn't it? I've been there, brother. I know what you're talking about. Ramakrishna, revenge trading. Oh, some of the psychological challenges coming in here. Linda, seeing good entries and getting in. Okay, very good. Definitely can help you with that, especially toward the end of the presentation. We'll show you how to solve that problem. Kevin, when to get out of option at most profit. Oh, yes, let your winners run, 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 and don't cut those winners short. A lot of option traders here today. Irene, to exit on time. Bill, sorry. Most common problem, finding stocks in the proper setup. We'll definitely help you very specifically with that today. Joseph, sticking to and executing properly a trade plan. I love it, Joseph. That's a great issue to bring up. You got to have a trade plan. Just like I said, trading is a real business, not get rich quick. Well, you need a trade plan just like you need a business plan when you run a business. So good. Yvonne, pulling the trigger, another psychological challenge. L, waiting for the stock to trend. Show you how I do that. Daniel, timing is perfect for me to learn about. Good. Casey, consistency. Daniel, Forex. Okay. So, Benoit says, can we use your method for trading with line break charts? I've done that, actually. Yeah, I have done that. Absolutely. Okay, so let's get going here, but thank you very much for that. So what I'm going to do is, a lot of you are having problems with timing, various ways of saying timing issues. And let me share with you this survey that I did, the results of a survey, when I sent this very question out to literally tens of thousands, over 50,000 traders. And here are the top answers that came in. Interested in what kind of answers came in? Well, here they are. Number one, and I kind of grouped these together. So, you know, a little different wording, but the same meaning. Number one, people said, well, I would enter the market, and then right after I get in, I get stopped out. Then the market goes back in the original direction of my trade. And man, is that frustrating. So that, again, is a timing issue. Let me bring up my little freehand drawing tool. So it'd be something like this, because I actually talked to people about this. After we took the survey, I'd talk to them on the phone. And I'd say, explain to me. And so this is what they'd say. Okay, so we got like higher highs, higher low, higher high, and then higher low, and then they'd get in. And then all of a sudden they'd get in, and then boom, the market would turn around and stop out, just like a lot of you said. You know, as soon as I get in, I'll buy a trend, and then dag nabbit, as soon as I get in, well, then the market turns around and stops me out. Well, what's doubly, sometimes it'll go down, and then other times it'll just stop you out, and then it goes to the moon, Alice. Well, Jackie Gleason honeymooners reference there for all of you as old as I am, back in the days of black and white TV. And when I studied in Chicago, I actually got an apartment and studied at the Chicago Mercantile Exchange and worked with the floor trader there. And one of the things he taught me was, he said, Barry, retailers, which is what basically they call losing traders, retailers are often right, but at the wrong time. Retailers are often right at the wrong time. And that's what's happening here. If you think about it, a chart is just a two-dimensional object, right? So this over here, we've got price. And people do all kinds of stuff with price levels, indicators with price patterns, candlestick patterns, all that. And that's great. You got to do that. But what a lot of people don't spend much time on is time. And that's the other axis. So if you think about it, a chart has only two dimensions, price and time. And so if you don't have some sort of very precise and accurate timing tool, you are missing out on 50% of the two-dimensional object. Well, how in the world can you develop a probability scenario if you're leaving out 50% of the information on the two-dimensional chart? You can't. Right? Probability, you got to have better than 50%. So what's happening in this little scenario is people are getting in at this time. So they're right about direction. They got the direction right. The trend was up. But they got in at this time. They got in too early when this was the right time to get in. So I'm going to show you what kind of tool I use and actually how it's set up on the chart. I'm going to get really specific with you today and show you how to do that. Sound good? So that we can avoid this problem. That's what we like to do, solve problems. All right, so then the second one that came up was people saying, and a couple of you said this too, getting out of big moves too soon. And so not making the huge profits. We're all familiar with the slogan, cut your losses quickly and let your winners run. And that gives us a good reward to risk ratio. So yep, got to have that. Number three, getting stopped out too often. So my goal is I want to stop you getting stopped. You want to stop getting stopped? Let's stop you getting stopped. I'll show you how to do that today. Not knowing the best place to exit the market. A lot of you said that. And number 5, trading a trend that doesn't follow through. So as opposed to the example I showed you at the beginning there, sometimes the trend doesn't continue after you get in, and it actually starts trending in the opposite direction. So it's like somebody said, you know, buying at the top. Yeah, John, buying at the top of a trend. Okay, so the reason I want to show you the results of this survey is actually to encourage you a little bit that you are not a uniquely bad trader. A lot of times trading can be very isolating as we trade in our homes or offices, and we're not quite sure, are my problems unique? Is this only me? And I know in talking with a lot of traders that they feel that there's something wrong with them. They're the only ones having these problems. Brothers and sisters, I'm here to tell you, you are not the only ones having these problems. These are the most common problems. Not only they all, but we all, I include myself in this, we all have struggled through. And I've been through all of these struggles. I've had all these problems. And the good news is that there is a solution to them all. So you are not a uniquely bad trader. There's nothing wrong with you. These are the challenges we all face, and there are answers. So what is the answer to successful trading? First of all, let me be very clear, because I find that a lot of beginning traders think that there's one holy grail indicator, one magic price pattern, one, you know, super duper whooper candlestick pattern that's going to make them a winning trader. And there is no one thing. So very important that you grasp that. Trading is, as I mentioned in passing, it is about developing a probability scenario. Now, a probability scenario means that we have to have a number of variables that align. So by definition, more than one. And we do that, we create a probability scenario by creating a methodology. A methodology. And again, somebody said that that's why I love you guys doing a little bit of back and forth here. And somebody mentioned a plan. That's exactly it. That's exactly the right idea. So we don't need an indicator. I mean, indicators can be great. They can be a tool that serve us. Absolutely, yes. But that's not alone what's going to make you money. You need a successful business plan, or in this case, trading plan. So I call it a trading methodology. And my trading methodology is all about measuring what I call the energies in the market. Now, what do I mean by energies? I'm talking about the energy of money. The energy of money flowing in, the energy of money flowing out of the market. For me, that's all that matters. Money flow, the strength of money flow. Now, I break the energies of money flow down into 5 subsets. And these are the 5 non-correlated variables that we're going to put together to establish a probability scenario. So here they are. I'll just list them for you real quick. Numero uno, number 1, eins, hana, that's Korean, ichi, that's Japanese. I am pentilingual with the number 1, which is very impressive in case you didn't know. So number 1 is trend. So I start out and I say, okay, the first thing I'm going to ask myself is, what is the trend? Up, down, or sideways? And which direction do I want to take the trade? If I'm an option trader, do I want puts, calls? Do I want a directional neutral, or a neutral strategy with regard to direction? And so that's a great place to start, right? And then there's a second part of this, and that is, how extended are we in this trend? We don't want to be buying at the top of an uptrend, so therefore, we all know the saying, the trend is your friend until the end. Well, what does that saying actually mean? What does it instruct us to do? And a lot of people say, well, it says don't buy in a uptrend. Yeah, sort of. That's part of it. Some people say, well, it means trade with the trend. Again, yeah, that's part of it. But that's not really the exact meaning of that slogan. The instructional part, when we're going to apply that to our trading in a practical way, is a timing issue. It's a timing issue. It's directional, but it's directional and timing. So when we say that we trade in the direction of the trend, that's true, but we want to trade early in a new trend. If the trend is your friend until the end, that means at the end it's your enemy and early it's your friend. So the trend is your friend until the end. Until the end is really the instructional part. So we want to trade early in a new trend, not just with the trend. Number 2 is momentum. That's the second energy that I look for. And really, my trading methodology is, I guess you could say, it's a 5-step checklist. So I like that. Just 1, 2, 3, 4, 5, and always in this order so that our trading is orderly. Why is that important? Because some of you mentioned some psychological challenges that you're having. Well, in order to overcome, and by the way, it's very legitimate, very legitimate. There's a lot, I mean, trading is very psychologically challenging. So we've got to address that head on. And one of the ways I address that, well, actually 2 ways I address that. Number 1, to keep things simple. So I only look at these 5 things, a 5-step checklist. And number 2, not only do I keep things simple, so that I don't get information overload. Last thing you want to do is get information overload, and most people suffer from it in trading. But we also want an orderly method so that when we're thinking in an organized manner, and we have clarity. And so therefore, I look at these 5 things in this order. So number 2 is momentum. Now, trend, up, down, great. Early, late, great. Third aspect of trend, strong or weak. Very few people consider whether a trend is strong or weak or know how to measure that. So in the example, well, several of the examples that we talked about in the problems that people have where the trend goes against them right after they get in, one of the big issues is that you're trading a trend that is weak, but you don't know it. That's not your fault. Hey, if nobody's shown you how to do it, of course you don't know how to do it. Yeah, we all have to be shown how to do something the first time sometime, right? So hopefully, at least for some of you, this will be the first introduction. Some of you already know this, and that's fantastic. But never take a trade unless you determine first if it's a strong or weak trend. If it's a weak trend, you do not take the trend trade. Trend is not enough. Trend is just direction, and direction can change at any moment. So it's got to be a strong trend. In fact, when I first learned this, I actually wrote this on a Post-it note. I wrote a question, and I pulled out a Post-it note, and I wrote down this question. Is this a strong trend or a weak trend? Took that Post-it note, put it on my monitors where I traded so they would be in front of my eyeballs, my hazel orbs, every time before I took a trade. And I would literally see it visually, and because I had to remind myself because I kept forgetting. And boy, that, I got to tell you, that really, that was one of the most recent, even though it's been more than 10 years ago now, but that was one of the most recent things that made a dramatic change in my trading, is to determine strong trends from weak trends. Now, step 3 is cycles. Now, here's where timing comes in. So those of you who are saying you're having trouble with timing your entries and exits, okay, step 3 addresses that, cycles, and I'll be showing you how we do that on MetaStock today. So there's many different types of cycles in the market, by the way, but today we're going to address cycle highs and cycle lows. So swing highs, swing lows, whatever you want to call it. And using this, I'm actually able to trade retracements with tremendous accuracy. The way that I measure these, and I'll show you in detail, really nails with pinpoint accuracy a huge percentage of the time the final high and the final low in a market. And then support resistance is energy number 4. So now, see, this is time and this is price. And the famous trader W.D. Gann, he talked about trading being all about the confluence of time and price. So there's our 2 axes. And of course, you've got to have support resistance levels on your charts. The market looks at those very seriously, buys off of them, sells off of them, takes profits off of them. So yes, got to have those. And then the 5th and final energy that I look for. So first of all, these first 4 energies of money flow, remember, just think of these as the energy of money flowing in, flowing out. This is essentially what tape readers do. And, you know, tape reading is fantastic. Great way to trade. Takes a little bit of time and experience and skill to do it. And so we're kind of doing the same thing in the sense of looking at money flow. We're just using indicators to map it on the chart and create patterns that are tradable. And these first four, then we'll do that on the shorter term chart. Then I look at a higher time frame. So let's say you're looking at a daily chart for your trades. Then I'd go to a weekly chart, and I call that my fractal energy. And the fractal energy just means a different scale, different time frame, a higher time frame. And I will only, if we get a perfect setup on these first four, I still have to look at the higher time frame, and I will only take the trade if it is moving in the direction of the dominant energy. And by the way, the dominant energy is momentum on the higher time frame. So this is a filter that will keep me out of an otherwise good-looking trade on the short time frame. So to determine a probability scenario, how do we take this information? Now we've got 5 pieces of evidence. And how do we take these 5 pieces of evidence to actually make the money? So at each potential entry point, I ask how many of those 5 energies are aligned, being bullish or bearish. Give each setup a score of 1 to 5, literally like a scorecard. Obviously, the higher the score, the higher I consider the probability of success. And I liken this to taking each trade to court. I need 5 independent witnesses to establish a preponderance of the evidence. The operative word there is independent. It is not, I have to restate this again, it is not about indicators. In fact, let's address that real quick, a little reality check. What the heck is an indicator? I'm a very literal and concrete person. There's nothing magical about an indicator. They are not magical. They're not crystal balls. They're not magical, but they are mathematical. That's literally what an indicator is just a math formula. That's it. And what do they do? Well, the question, or the answer is in the question. What do indicators do? They indicate. Okay? They don't tell. They don't make money. They're a math formula. Now, the good news about that is that because they're a math formula, they're actually literally never wrong. And that's kind of cool. An indicator, you cannot actually say an indicator is ever wrong because the math formula is always right. It's just crunching the numbers. And whatever number pops out the other end of the formula, that's the correct number. So why that's cool is that we can actually use it to create a rule-based and objective methodology whereby we all see the same values, the same numbers, and it's repeatable and duplicable. And again, we can create a rule-based method because we're using solid numbers based on the calculations. And what, by the way, what do the mathematical indicators calculate? They calculate the energy of the money flow from 5 different perspectives. So we are removing discretion. That's the point. So I've done seminars in front of, well, literally thousands of people. And I've shown a chart, just a blank chart, not even candlesticks, on the big, huge screen that they'd have projected up on the wall. And I would ask people, okay, here's a chart, no indicators, no moving averages, just blank, open, high, low, closed bars. How many think this market's moving up? And about 40% of the room would raise their hand. And I'd say, okay, how many think the market's going to move down? About 40% of the room would raise their hand. I'd say, okay, how many people wouldn't give me an answer no matter what I said? And I'd like to say 20% raise their hand, but these are people that don't answer, so nobody raised their hand. So, okay, well, that's what makes a market, my friends. 2 points. Number one, you see how discretionary that was? So just looking, just eyeballing a chart is almost like a Rorschach inkblot test. You're going to read into it what's in your mind, what's in your gut. You know, and I've done psychology, I was a marriage counselor and all this, so I understand how this stuff works. There's no meaning in a Rorschach inkblot test. The therapist puts that in front of you and is reading you by what you read into that pattern. And charts are that way too. We kind of read into the chart what's in our mind, what's in our instincts. And our instincts in trading are frightfully wrong. Frightfully wrong. Trading, good trading is unnatural. In fact, I wrote an article about that. Good trading must be unnatural was actually the title of the article. And the reason goes back to the fact that most people lose money. Why do most people lose money? Because we as human beings are social beings. We have a herd instinct. And because we have a herd instinct, we can't get over that. That's just part of our nature. That means you're always going to be, by nature, by your instincts, part of the 80% who lose. And so you have to go what's against your nature. You cannot trade by your instincts. I've met one person in my life who was a natural trader. One person in 50 years. So there's always an exception to the rule. But other than that, if you go by your gut feel or by your instincts, you will lose. Good trading is unnatural. You have to go against the herd, which means going against your gut, which means we've got to create a trading method that is rule-based, objective, and at times is not going to feel good. The good trades often feel uncomfortable. So we take these 5 energies that are not correlated to each other. They're independent. So again, you can't just put any 5 indicators in a chart and say, oh, I'll use a scorecard of 1 to 5. Because maybe all 5 indicators measure trend. Well, you only have a score of 1. Yeah, you got 5 indicators, but you're only measuring 1 energy in the market. That's like putting 5 speedometers on the dashboard of your car. Yeah, you got 5 instruments, but you're only measuring speed with all 5 of them. So the key to these 5 energies is that each one is not correlated to the other 4. And so when we get 5 non-correlated energies all agreeing, now we have a preponderance of the evidence, now we have a probability scenario, and that's what helps us make money over a large sample of data. So here's an example. Take the theory, the ideas, the concepts, and show you a concrete example. So on the left, we've got a 10-minute chart. On the right, we've got a 30-minute chart. You can use a 1-to-3 ratio, 1-to-4 ratio, 1-to-5 ratio. And here we go. So here's our 5 energies. So over on the short-term chart, we are starting a new trend. And by the way, the Tough Dog Trading plugin will plot all this stuff for you. It's very cool. So starting a new trend, when we say trade early in a new trend, the rule is, again, we've got rules for this, the first 2 cycle lows in a new uptrend. So the word early can be very subjective. Well, we remove subjectivity and we add wave counts. And these are not Elliott waves, these are, well, Berry waves, for lack of a better term. So 50 MA is moving up. That's what I use for my line in the sand between a bull and bear market. It's angling up, so we're in an uptrend. We're at a wave 2, which is our first cycle low in a new uptrend. Cool. So we're early in a new trend. Momentum, that's our momentum indicator. It's moving up. We've got a cycle low. Now, this is the key. And so, well, let me actually come back to this. We've got support of the 50 MA, and over here on the longer term chart, the momentum is moving up as well. All right. And we're looking at the red line on momentum. So we use both lines, but I don't have time to go into all the details today. And also we're putting in a cycle low over here. So cycle low here, concurrent cycle lows we call that. And then momentum moving up on both time frames. Okay, let me show you this. This pattern right here is called a mini divergence. This is what indicates that we have a final cycle low. So this is a modified stochastic, as you can see there. It's the stochastic indicator, but we modified it. And it's this little pattern on %K. K is the black line, D is the blue line. But it's the K line where we are seeing a momentum shift. In other words, yeah, we got this move down, it even gapped down a little bit here. And then the indicator shifted momentum to the upside just within 5 bars. That's literally what's happening if you look at the mathematical equation. And that's what tells us, okay, it's a final cycle low. Now notice we have a mini divergence here too. See a little up, down, and down, a little lower high. But we don't want to short that. Why? Now it does nail the cycle high. It nails it, so it's correct. But we don't want to go short because we're in an uptrend. So timing your cycle highs and lows is great, but you can't trade it by itself. This is why we have to use all 5 energies. Trading in the direction of trend gives you a good reward to risk ratio if you trade early in the new trend. Trading against the trend, well, trend is the long-term direction of the market, so we don't want to trade against it. We want to trade with it. So that's why you've got to put those together. So here's my favorite trading technique for pinpointing market highs and lows for entries and exits in a solution for a good cycle indicator. We're going to use the right inputs, the indicator, the parameters, and so forth. So let me just spell this all out for you here. So we use our stochastic oscillator, and we're going to change the input. So it is your traditional stochastic oscillator. There is no special indicator you've got to import or any of that kind of stuff. But we do have to change the parameters because stochastic, actually when George Lane created this, he did not create it as a timing indicator. He created it as a momentum indicator. The math formula, if you look at the math equation, it measures momentum. But we're going to use that to our advantage and turn it into a cycle indicator by reducing the periods. So time period is going to be 5. Slowing, that's a moving average. So we're going to do a 2-period moving average of a 5-period percent K. And then percent D is a moving average of the smoothed K, and we're going to make that 3. So 3, and simple moving average as opposed to exponential or whatever. Okay, so that's how we modify the stochastic indicator to turn it into a cycle indicator to nail cycle lows and nail cycle highs when we get these particular patterns. Now I also like to put in some horizontal lines there, as you can see, at 20, 50, and 80. 20, 50, and 80. So normally for most charting platforms, I think the defaults are usually like 25 and 75 or 30 and 70, but for our purposes 20 and 80, and I like to put a midline in there at 50 as well. All right, oops, got it there already. Okay, cool. All right, so again, this indicator, the cycle indicator, as we've modified it now, is meaningless like any one energy by itself. So we have to use it with the other energies. So we're going to only trade these cycle highs and lows in the direction of the trend early in the trend. Only trade cycles that have momentum, because timing does not give you direction. It does not tell you how strong the move is, as I've shown you already. That's why I wanted to show you that. You can have cycle highs that then don't move very far and cycle lows that don't move very far. So we've got a momentum aligned with it. And then, of course, only trade when the fractal energy is aligned as well. And we've got to wait for these particular patterns, these second chance patterns, like the mini divergence that I just showed you. So we'll show you that again. These second chance patterns indicate that we're having a momentum shift. Okay, I'll have to change that later at the top or the bottom of a cycle. So mini divergence is the one that we'll show you today, but there's 5 more of these patterns though. So these second chance patterns, again, are showing you a momentum shift within 5 bars. And the reason is because we're not looking for a divergence between cycle highs, we're looking for divergence within a single cycle high, or conversely a single cycle low. So here's what we want to avoid, for example. So here's the same indicator, okay, and notice how it just comes up here, okay, goes to 80, that's the horizontal line, K crosses below D, and so great, that's awesome, except for one problem. If you went short there, it didn't go down very far, and you got stopped out. Broke that high. That's not what we want, right? We want to avoid that. So how do we avoid that? We look for these patterns. So this higher low on percent K is the blue line, by the way. This gives us the momentum shift within just 5 bars. So we've got equal low on price here, but a higher low on the blue line, percent K. That is literally saying that there's a momentum shift at this low and to the upside. So it's gone down on strength, goes up, comes back down, but not on as much strength now. So this move down, even though price is equal, this indicator pattern is giving us an inside look that it's not really obvious just looking at the price bars. And that's what indicators do when they're most useful, is they show us something that price itself isn't showing us in an obvious manner, at least. And that's one of the things indicators can do. They can create these patterns to say, oh, okay, this is more understandable, more easily read by even beginning traders to just see that. So we want to see that, okay, coming down on strength, came down on weakness, and therefore it's not likely to continue going down, and it goes up. And that's our final low, and that's what helps us to say, oh, this is the time to go long. All right. And so momentum, we're still using it as a momentum indicator, but just at the lows and just at the highs. Now, this can work for reversal trades as well, but again, we don't want to trade a reversal of the trend early in a new trend. So if you're late in an old trend, we get past 5 waves, then we start looking for trading against the trend, because the trend is no longer a friend when we're late in an old trend. So if we've been going down for a while, now here we actually make a lower low on price, a little bit of a lower low, but look at percent K, higher low. Little mini divergence. See how mini that is? Again, it's just within 5 bars. So it's coming down on strength. The proper way to read this, actually, let me bring up my little pen here. This thing's coming down on strength. And we know that because this is showing strength to the downside, strength to the downside. Now the price comes down even with, I won't say more strength, but it just comes down even further. The percent K, no. Weakness, because K can come down lower, right? Can go all the way to 0, but it doesn't. And so that shows that, yeah, we made a lower low, but on bearish weakness. And therefore, that is our final low. Therefore, that is the time when we could take that long and get into a reversal trade. And it goes to the moon, Alice. Okay. So, can also work for contraction and breakouts. So we've got markets moving sideways here, been in a low volatility situation. Part of that can be seen by the 2 moving averages. By the way, yes, this red line, that's the 50-period simple moving average. The black line is the 15 EMA. And so they're close together. That, I mean, literally mathematically means there's been basically no difference in price action between 50 bars ago and 15 bars ago. So it's consolidating. And after contraction, we look for expansion, right? So, okay, when's this thing going to break out? We look for a timing issue, and there we go. Higher high on price, lower high on percent K. See how mini that is? We're not looking for divergences, between there and there. This is where most people look for divergences, between cycle highs or between cycle lows. No, not looking for that. Not in this case anyway. Not saying you can't do that. I'm just saying that's not our purpose here. And so therefore we say, oh, that's the time to take this short as a reversal trade. And again, putting it together with everything else, but just the timing element. So, summary of high probability trading, we are waiting for the alignment of the 5 energies to put the odds on your side. And here are the 5 energies in one sentence. It does take an entire sentence to describe my trading methodology. So here it is. You might want to write this down. This is it in a nutshell. I'm looking for trend. That's always number 1. By the way, again, it's always in this order. So the trading method is very orderly, very systematic, very simple. Well, I don't like to ever say trading is easy, because trading is not easy, but hey, if it's not easy, let's at least make it as simple and clear as possible. So we're going to trade early in the direction of a new trend. And early is defined as the first 2 cycle lows in a new uptrend or the first 2 cycle highs in a downtrend. So now we've eliminated subjectivity from the saying, the trend is your friend until the end. And we've created a rule-based method. And I've shown you how to measure the cycle highs and the cycle lows. So looking for that. That is strong. And with the Top Dog Trading plugin, you do get the momentum indicator that I use. You can use a lot of different momentum indicators out there. There's all kinds of ways of measuring momentum. That you can use a time and sales window. You can use level 3. All those things are fantastic. So a lot of different options for you. The particular tool that I use is included in the MetaStock plugin. And then at the right time, so if we have a trend that is weak, we're done. We don't even continue. But if we have a trend that is strong, then we continue with the checklist. And then that's when our timing indicator comes in. Then we say, okay, now when do I want to get in so I don't get stopped out? And I want to make sure that that time, that mini divergence pattern comes in at a support level. Again, confluence of time and price. And that's all on the short-term chart. And then I look at the longer-term chart and make sure I'm trading in the direction of momentum. So I like to trade in the direction of momentum of the bigger scale, the bigger time frame. And that way, think of that. If you got momentum going up on both the short-term and the long-term chart, well, momentum is strength. That means that market's going to really move. And that's what we want. We don't want to get into markets that just kind of hang there after we get in. So that's why I like to trade in the direction of momentum of both time frames and don't put as much emphasis on trend on the longer-term time frame. I trade this with stocks. I started out as a stock trader. By the way, MetaStock was the very first charting platform I ever used, and still use it, so I love it. And stocks, commodities, options, currencies, futures, use the same 5 energy method for all of these. I use it for day trading, swing trading, and investing, and I do all 5. It's just a matter of which time intervals you want to use. So it's a method that's very robust, very adaptable. Since we're measuring the energy of money flow, what you're doing is, here's the reason that this is so adaptable for different markets and time frames. Since we're using math formulas, the math formula gets its data from the chart that you're putting up. So whatever market you put on that chart, whatever time interval you put on that chart, it's pulling data from that market relative to that time frame, taking that data and plugging it into the left side of the math equation. So it's already accounting for whatever market and time interval you use. Then it crunches those numbers based on this formula and spits a value up the right side. And that's your number that you plug into the rule-based method. So, oh yeah, this is awesome. So what we've got here is with MetaStock, we've got something that we don't have with anything else. This is only available with MetaStock. So you can, and Jeff will probably show you some of this, but I just can't help myself. So we've got these awesome commentaries, and as far as I know, well, nobody's allowed to have this except for MetaStock. So you can actually show these things here where you pick a particular time, and then these commentaries come up. So wave 9 reversal. All right, so there's your wave 9 reversal. And here it describes the basic setup and gives you the rules for it. Remember, everything's rule-based. And then these commentaries. So you said, well, we have trouble knowing when to get in, when to get out, all that kind of stuff. Well, there it is. Here's the setup. Here's the confirmation on the longer-term chart that we look for. There's your entry. Here's your initial stop. And here's your targets. What? Yep, that's right. It's all right there for you. It's amazing. It's awesome. I love it. So there's my email address. I'm going to throw it over to Jeff here in just a minute, and you're welcome if you have any questions to send me an email. Never feel shy in emailing me. I love corresponding with traders. I just live for this stuff, so it's fun for me to correspond with you. And also I do have a freebie for you today. It's a course that will go into a little more detail in all of this. So it's a free little 5-day video course. It's 5 days of professional trading videos, Trade Strategies of the Pros, it's called. You get 5-minute video tutorials. So they're real quick, just to the point, very focused videos. And in there, I'm not only going to give you theory, I'm going to throw in something very, very practical. One of my favorite trade strategies. It's called the rubber band trade. And what I'd love for you to do is hopefully start making some money with this. So I'm going to give you the rubber band trade for free. Again, like with everything, please trade it on a simulator or demo account first. Make it prove itself to you. But yeah, just going to give you that free trade setup and enjoy it. And you get it right here, topdogtrading.net. Please note that for this special, it's at topdogtrading.net, not .com. I do have .com as well, but that's just my blog. So if you want this, just go there, get everything, and enjoy. So, Jeff, I'll turn it back over to you. And once again, thank you very much for having me on today. I've enjoyed it, and I hope that our attendees have as well.
Very great job. I appreciate it. You guys can now hear me. Is that correct? Well, it helps when I unmute my microphone. I usually try and just keep it as quiet as possible, and I forgot to unmute it. In any case, Barry, we really appreciate you coming in. As always, a very, very thorough job in terms of kind of like what you were showing and that kind of stuff. Fausto, I understand you're having some audio issues. So what I would recommend for you to do in terms of your microphone is I find that if you just unplug your actual microphone and then plug it back in, GoTo will usually recognize that. So give that a go. Feel free to talk if you need to, and just make sure we can kind of get you in there and testing. Barry's product does a really good job. One of the things I love about his energy method, and I didn't hear him say it today, although I did have to sneak off to the bathroom for a minute, is his 5 energies and kind of taking them to court and taking his trades to court. I don't know if he used the taking it to court story that he usually talks about, but it's about kind of going in and looking at different energies and kind of finding where they match. And all of that is kind of wrapped up into the MetaStock add-on. So when you actually go in and see a trade on a chart, you will actually be able to kind of know that it's actually confirmed and it's something that you can actually go ahead and go in and trade. He does have a very simple methodology. I'm just going to kind of break down a chart for you real quick here. We are labeling all of the patterns on the chart for you. When a buy signal comes in, you're going to notice that it does trigger a signal on the chart. And if I click on that signal, in fact on the Apple, we just triggered an entry after the second wave. Here we had a second wave that formed. Right now we have an entry. It is going to specifically spell out the exact entry price, 171.87, your initial stop, and tell you your targets. One of the things, and you'll notice that we've got the first retrace after the cross and your first retrace in a trend. So you'll notice that both of these patterns are showing up. If more than one pattern actually shows up on the chart, it'll actually show them both to you in this commentary. One of the things that Barry did a really good job with is he wanted to provide a lot of really, really good information. So you'll notice there's a little bit of a file link that you can click on right here. It'll actually take you to a full breakdown of that particular chart and that particular method and what it means. So Marcelo says he did say that. I must have just been in the bathroom during that time. In any case, let's kind of go through. Here's kind of the signals that are all broken down. It's all broken down into one commentary with several different scans that you can run. So all of these patterns that are kind of listed over these screens, you can get alerts for when they happen, and you can also use the MetaStock Explorer to scan for them. And we'll go through them a little bit quickly just because of the time. It is a very, very popular add-on, and again, when we create these products for MetaStock, I try and make them better than any of the other integrations. And it's not really hard to do because we have the commentary. We do have, unlike a lot of platforms that are out there, the ability to scan whatever markets you're interested in and not be limited to like 500 or 1,000 stocks. We can scan everything. And here's that screen I was talking to where it kind of breaks down all of that additional commentary and kind of gets it going for you. So there's the patterns that are available for trading. There's tons of indicators. Everything's kind of well laid out for the chart on it. His add-on retails for $499. Here at the Summit, it's $399. If it comes with a subscription trial to MetaStock, access to your MetaStock Zenith if you need it, a bootcamp live sessions that we'll be doing, the Unleash the Power of MetaStock. If you want to try it out, again, I would recommend 800-882-3040, metastock.com/sales chat. One of the things that we do is if you try this out and you decide you don't like it, we'll just give you a refund. It's very, very low risk, high reward proposition. So traders love it. This is the fourth of the add-ons that we'll be covering today. So you've got Rob Hoffman, we did Price Headley, we did Veracity, we did Barry Burns' Top Dog Toolkit. All of these are great add-ons. If you want to try all four of them out, normally that would cost you $26.74, and that would include access to MetaStock, the technical analysis of stocks and commodities, 3 months of access to MetaStock, the boot camp that I'm running, or the Unleash the Power of MetaStock. All of that is kind of bundled together at a discount price of $1,599. To take advantage of that, or just get the MetaStock, or just get one of the add-ons, give us a call. 800-882-3040. You can also visit us online at metastock.com/saleschat. We do have a couple of reps that are here. I want to say thank you to everybody that's ordered so far. Let us know if there's any questions that you've got. If you even just really want to get more information on MetaStock, let us know. We can definitely provide some information to you and kind of get you started in your education path. Do want to say thank you to Stocks and Commodities. Again, can't say thank you enough. It is the week of Thanksgiving here in the U.S., or next week is anyway. We're one day away. So they've been great, though. It's a great magazine. They've done awesome things with us in terms of sponsoring the event, and we really appreciate it. And if you don't get Stocks and Commodities, I recommend that you do. It is that valuable. Again, with MetaStock, it's a huge toolbox. We've had a lot of people asking about how we can get more information on MetaStock. My answer to that is stay tuned. Towards in a few hours, I'm going to do my part to kind of talk a little bit about MetaStock. But here's some of the bullets. One of the things I like to say about MetaStock is for 25 solid years in a row, it's been rated #1 in its price category. We're offering an extended trial that allows you to try MetaStock for $59 for 3 months. It's $20 a month. More than enough time to determine why it's been rated so highly and how it can help you find the better trades, identify what's going to work well, all that kind of good stuff.